All right, everybody, I've got about 10 a.m. Pacific time on December 1st. Happy December 1st. Good morning and/or good afternoon, everybody, and welcome to today's KAMIND webinar, Cyber Security Insurance. What you don't know can hurt you. My name is Mike Klass, and I'm an account manager here at KAMIND IT. Before we get rolling today, a few housekeeping items. We want this to be very interactive today. So if you're not specifically asking a question, if you can please keep your microphone on mute. With many of us still working from home, we'd like to eliminate all background distraction noises if possible. If you have any questions mid-presentation, feel free to use the chat function or the raise hand icon. Those are great ways to get your questions answered. And you can also unmute and just ask your questions away. We look forward to it. We will be recording today's webinar, so if you're uncomfortable with this, now would be your opportunity to opt out. Now with that out of the way, let's get down to business. We are very excited to have a special guest speaker with us on today's webinar, Mr. Rusty Goodwin from Midstate Group. Some of the questions you might get answered today, hopefully, are what's the difference between an insurance broker and an agent? Why has your cyber premiums increased so much this last year? And also, what do you need to do to uphold your commitment to your cyber security insurance policy? And I bet you even have a few other questions. So please sit back, relax, and let's hear our president and CEO, Mr. Matt Katzer, start the conversation today on cybersecurity insurance. What you don't know can hurt you. Please take it away, Matt.
Hey, thanks, Mike, and thanks for the introduction, and welcome everyone, and welcome to this kind of fun webinar. And it's really, I really look at, we went and talked to a lot of different folks, and we have a very good friend of ours, Rusty Goodwin, which I'll introduce in a few seconds, and basically talking about the whole concept when you look at cyber insurance and everything else. And even as you go through and looking at what for your business, I mean, we've seen a lot, our rates have gone up. What we used to pay for it years ago versus what we pay for it now, and get our surprise little letter at the end of the year that we have to actually increase or our carriers are changed. So we'll have a really good discussion. So we set this up in a way that, and we got some coordination. I'm probably gonna advance the slides for Rusty after we introduce him, and then we're gonna have a session really open up for questions that you have. And this is really about, it's stuff that we all need to know, and it's information they all need to take care of to basically make sure that we're on top of things. And before we start, just a little bit about KAMIND. The fourth-year company at the Inc. 5000, fastest growing companies in the US. We typically grow at a rate about 30% a year and higher. And we're also one of the 52 companies in the US that handles the high-end security subscriptions for the Department of Defense. So we do that as provide those as well. And what's interesting on it is, and this is where we actually got introduced to Rusty, and it's a good segue to talk with Rusty. And what happened is that we found out in situations that as we go deploy the various types of tools and everything, we need to be compliant with all the federal regulations for the Department of Defense, and also under the negligence, the different acts. There's whistleblowing acts, for instance, that we're now come under. There's negligence acts and everything else, but dealing with the Department of Defense. We started implementing different types of policies and procedures in place to basically make sure we address it. And this gets into, in discussions I have, and I'm going to introduce a good friend of mine, is Rusty Goodwin, and basically and we're going to talk about the cyber insurance and what you don't know that can't hurt you, and cyber risk. And when we look at the ability in terms of what this happens, it's really kind of interesting. Now, I've known Rusty for almost like a couple of years now, and we talked on various issues, and Rusty's really on the East Coast, and we talked about discussions about what should we do in our policies, how should we do it, how should we manage compliance, how should we work with our clients and manage compliance. And it's been really fascinating, and Rusty is a really very interesting person. And he's given the nickname, the best way to describe him, he's called the Fixer. And in terms of what he does, and that's kind of a good apropos, because what happens is that when people have issues associated with their policies and everything else, who do we actually call? We actually call Rusty and say, hey, Rusty, can you go talk to one of our clients, or can you actually consult with them, help them, and basically kind of get them out of the mess that they're in? Because it's amazing what happens, because nobody really understands insurance. We kind of do, but we also really don't. It's like what you say, what you don't know can't hurt you. And I've known Rusty for a number of years, and especially as we do a lot of the different activities in terms of HIPAA, in terms of the Health Insurance Portability Act, and also the CMC Cybersecurity Maturity Model Certification Framework, and just all the things that you need to know. And with that, what I want to try to do is to give a great introduction, and let's talk to him. Let's introduce Rusty, which is really super. He's been in business for way number of years in terms of handling, in terms of insurance, in terms of handling liability issues, insurance issues, claims in terms of cyber liability and cyber things. And let me just go to pass it on to the expert. Let me introduce a quick thing, the Fixer, and let me turn it over to you, Rusty. And because of a little logistics, just ping me if you want the slides to move forward, and I'll take them moving forward for you.
Okay. Well, I guess it's morning. So good morning to all of you. It's afternoon for me, but thanks for spending some time together. And Matt, I got to say, it's the first time anybody has ever used the word fun and insurance in the same sentence. So usually I'm the most hated guy on the whole discussion because I'm from the insurance world. So I kind of joke when I'm speaking places that to kind of bring people back to life after we talk about insurance, I'm usually followed by an IRS agent and a funeral home director just to make me look better. So, but let's talk today. And as I've worked with a lot of folks like Matt and his crew, Matt and Mike and Barbara, and end clients, a lot of MSPs, I found some common things that people think that could come back to bite them. And we just talked, as we were talking with Matt, they're just some common misconceptions, and there a few of them. We'll go through them. And the first one is we always assume that the promises that we've made are being kept. We can hit that next slide. That's a real thing I want to focus on for a couple of minutes, because as MSPs and as clients, I can't tell you how many times there's been a disconnect. So real often, say it's a vendor contract or even an insurance application, and that's the world that I live in. You're getting asked all kinds of questions, and you can nod your heads if I can see. Have you noticed that for cyber liability insurance, there's more and more questions now every year when you go to, is it getting rather painful when you see the price? Well, there's a lot more promises they're asking you to make on those applications. Things like, do you have multi-factor? And we'll talk about that. But we need to be careful about the promises that we make, but also make sure that we're telling our IT folks about those promises. And we need to understand the promises that we are making. And what are some of those? Well, in my world, that bigger column there, here's what's common with the insurance companies now: multi-factor authentication, things like phishing training, endpoint protection, that whole list. They've recently added, they don't want you just to say that you back things up. They want you to be able to prove that you do and that those backups work. They want you to be able to document that you've done cybersecurity awareness training, that you exercise proper password management. And those things are different, right, for every organization, depending on the level of disruption you can take. But then outside the insurance world, over into Matt and Mike and Barbara's world, on that left-hand column, you see a whole alphabet soup of local, state, and federal regulations that have to be met depending on the industry that you're in, the state that you're in, the country that you're in, not to mention vendor contracts. I have a client up in Michigan who for years made conveyor belts. That was it. Tables with wheels on them, that's what they make. And then a few years ago, he hired a developer to create a proprietary software program to operate those conveyor belts. Well, now everybody who buys the conveyor belts has a cyber compliance questionnaire he has to fill out, because now he's putting software in their network. Whereas before he was just putting hardware in their warehouse. So he's got national clients like Kroger, ConAgra, Boscoff, Georgia Pacific, who now say, okay, now that you're putting software in my company, now you have to answer this 40-page questionnaire about what you do for cybersecurity. So in that document or in his insurance applications now, he's making a lot of promises that he may not know really whether or not he's keeping them or not. And he may not understand what they are. So open dialogue between your IT, your MSP, between your insurance broker is really important as we go through these steps. So that's the first common misconception is you guys think that your IT or your MSP folks are handling all of it, even if you've never told them everything you've committed to. Another common misconception is, let's hit that next slide. I want to make sure I'm doing these in the right order, Matt. Yes, I can't tell you how many, even very sophisticated business people make the assumption that just because they have insurance means they don't have any risk. Well, you don't understand what you're paying for if that's what you think. That's like saying, I buy car insurance, so now I'm never going to have an accident. Well, that's just not how it works. Right? So we kind of sometimes don't understand what we're paying for. We also don't understand what's in the fine print. And I'm gonna get a little boring here for just a minute, and then I'll pop back out of boring. Okay. In the insurance contract, you have the application. Then everybody's familiar with that thing we call the declarations page, right? It's how much your premium is, what the policy year is, who the named insured, all that stuff. And then you have another section called the insuring agreements. That's all the promises that the insurance company is making to the person who's paying for that policy. That's called the insuring agreements. Then there's another section called the conditions. The conditions is all the promises that the person who owns the policy is making back to the insurance company. That's the section you really need to read or make sure your agent or broker explains to you, because in that conditions, which now your application now has become part of that. All those promises. Yes, we have MFA. Yes, we do phishing training. Yes, 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 yes. Now you've made a promise to that carrier that you're going to do those things. That now becomes part of your conditions. And then, of course, our favorite part is the exclusions, all the stuff they tell you up front. We're never paying for that no matter what you do. So you need to make sure you read all the way through that. And I'll give you a quick example. Well, let's go ahead and go to the next slide. You'll see now on the deck page, it'll say, hey, you've got some ransomware coverage. But then you read the MICE type and it might say something like, well, there's a co-insurance of 80% on the ransom coverage. So in regular language, that means they're only going to give you 20% of your claim. Right? So you need to read those things and make sure you don't go to bed feeling super comfortable that you're covered. And then you haven't read the MICE type and realize there's some different line items in there. You might have a $2 million policy, but they only give you $25,000 towards hardware. So you really need to read all those things in there or have a broker that can explain that to you. And part of the angst that I've been hearing from people is how expensive and hard it's to get. Let's just take a look at that. I want to defend the insurance companies for just a minute, and then we can go back to bashing us, and I'll be fine with it. I'll have to get my piece in there. So 2 years ago, last year and year before, for every dollar in premium the insurance companies brought in, they spent 95.5 cents. So if I said to you, hey, let's start a business and the most you're going to be able to keep is 4.5 cents of every dollar, you'd say no thanks. So, and that's just the reality. And the way they're solving this problem is a lot of carriers are leaving that market altogether. Matt, Mike, Barbara just found out a week ago that Beasley, that syndicate of Lloyd called Beasley, they are no longer going to write MSPs for cyber liability. That's not going to be an option for you anymore. They're going to finish out the contracts they have and not write it anymore. So they're leaving that market, or they're excluding certain types of businesses. The other simple thing is they're raising those premiums, or like we talked about with the ransomware and the hardware limitations, they're reducing those payouts. But the biggest thing they're doing, everybody, look at that last point. They are adjusting the terms and conditions. They're requiring certain behaviors of the end user, because the only way to really get that claims to loss ratio down is to not have claims. And the only way to not have claims is to corral in all of us human beings who keep making mistakes. We spend $250 billion a year on hardware and software to protect our data, but still 95% of all the breaches come from human error. And so you'll notice in that big list we showed about all the promises being made, most of those were wrapped around human behaviors. And that's where the compliance to these best practices comes in. So that's kind of like my appeal, to not be quite as mad at the insurance companies as you're tempted to be, because there are good reasons for it. If they can't stay in business, they can't keep insuring you. So let's go to the next slide. We'll talk about the next kind of misconception that we have is it's not going to happen to us, or it's never happened to us yet. We're too small to matter. If it hasn't happened yet, it's never going to. Well, I just say, oh, really? I mean, every day, look at that. I'm not going to read them to you because you guys can read, but I do want to point out a couple. 43% of cyber attacks are aimed at small businesses. Now, does anybody in this call, are you, Comcast, Walmart, or Disney? If you're not, you might fall into this category of small to medium-sized businesses. And of those businesses that get attacked, only 15% have good cyber hygiene. So now you can kind of understand why the insurance companies and why vendors and why the government keep getting nervous. And while we're on this little presentation here, one of us could be getting hacked right now and we wouldn't know about it for 197 days, according to IBM. And if we could find it out even within 30 days, we save $1 million in the overall cost. And here's one that I know is true, and I hope there's no CEOs in the call. If there are, this is no offense, but 75% of CEOs use applications that aren't approved by IT. I'm the boss. I can do whatever I want, right? And you're the problem. Guys like me are the problem. Guys like you and gals like you are the problem. So it really can happen to you. In fact, the FBI now classifies two types of entities. It used to be those who've been hacked and those who haven't been. Now it's those who've been hacked and those who don't know it yet, but they already have been. So there's breaches going on every day. Let's talk about another one. Another misconception is they think that being compliant or keeping these promises is too disruptive or too expensive. And we're too busy to take these extra steps. It costs too much money. And all I would say is, are facts like this disruptive enough for you? Let's look at that next slide. Let's look at what it could really cost. And I'll just give you a moment. This slide, I usually like to stop for a moment of silence because it's the worst. It's the worst news of the whole presentation. But look at some of those costs and look at that second to last line. So let's think back to that last slide. If we got a breach while we were sitting here and we found out about it 196, 197 days from now, it would still take us another 60 to 70 days to fix it. So now we're disrupted for 9 months because somebody didn't want to hit an extra button for a VPN or an MFA or take a phishing training class. It can be super disruptive. And look at that last one. 60% of us who get a breach go out of business within 6 months. And there's another stat that's not on the slide that I want to share with you, though. 59% of all businesses don't do any kind of phishing training or cybersecurity awareness training. Isn't that funny how it's almost identical to the ones that go out of business when they get a breach? Again, we're talking about promises and compliance that we have to make around our human best practices. Let's look at one, what the truth of these things are. The fact of the matter is all these promises, one way or another, need to be kept or not made in the first place. And the second fact there, Matt, is all you're doing is transferring risk when you buy insurance. You're not reducing it. There are 4 things we can do with risk. We can avoid it. And when I say that, I mean, you just unplug all your computers, never turn them on, never connect them, close your businesses down, and have no risk whatsoever. That's called avoiding the risk, but you can't do business that way. You can accept the risk. Oh, I'll just write a check if something happens. I'm not going to worry about managing it all. I'm just going to accept it. You can reduce it by keeping some of these promises, by bringing yourself into compliance, or you can transfer it through insurance. And it's got to be a mix of all of those things. No one thing will do it. And then the fact of the matter is breaches will eventually happen, and compliance and keeping these promises doesn't have to be too expensive or too disruptive, especially if we use governance. Now let's look at that next slide, Matt. So there's one more truth or so I want to share with you, and this is probably the most important one to remember, all risks change over time. And Matt, I don't want to sound condescending, but I'm super proud of you guys because you never talked to me this way, the way some of the MSPs I deal with do. Here's what I get when I talk about this subject with a lot of MSPs. Well, I don't want to go talk about changing anything with my clients because they're going to think that I've missed something or not doing a good job. Well, that's a terrible reason to not talk about facts with your clients, because the decisions that we made about risk and security 3 and 4 years ago don't work for today. All risk changes over time. So 2 and 3 years ago, we probably already made great decisions. We made wonderful decisions. But now 40% of us are working remotely because of COVID. You know, there are more and more malware produced every day. There are all kinds of things we didn't have to face 4 years ago. So we've got to constantly make data-driven decisions that drive us to governance and compliance. So never be afraid to have those conversations about reevaluating yesterday's decisions. Let's go to the next slide. And we talked about this already. I got myself out of order, but that's just a rehash. How do we manage that risk? And again, those are the 4 tools that we use to manage our risk. Let's go on, Matt. So if we're talking about having a mature risk posture, we need to have it. I call it the 3-legged stool. Matt and these guys get sick of me saying it, but it makes the most sense to me. I'm not a techie. I'm kind of like a crash test dummy that's figured out how to take the nerd speak and translate it to the normals, right? So I'm a simpleton, so I need an easy concept. We need insurance, compliance, and security to have that mature risk posture to best protect in a layered fashion all of our data and all of our organizations. Let's move on, Matt. So I can't see that. I don't have the chat room, but Mike, I think you're managing that. I tried to fly through that because I wanted to really this to be more organic and open up for questions. And you're certainly welcome. Almost every time there are very specific questions that people don't feel comfortable asking in public. You can certainly message me privately. I think Matt at the end will provide my email address. So there's no question that's dumb. There's no question that's off limits. And Matt, I think what we talked about the other day will work. You and I have unique perspectives on all of these issues. And I think I'd like you and I each to take a crack at answering these through the different filters that we see things, right? I see them more from the liability and risk management side. You see them more from the person who actually has to do all the work of the things that I say we ought to do.
So and I'll jump in and say we also see it from the risk and liability side too. So we're all on the same page on all this. It's all about how do we be good stewards for our clients.
Well, and let me throw one thing in from a few slides back that I forgot to mention. When you're talking about cyber liability insurance, the reason why some of the promises and commitments that we make are also important, another reason why is a misstep on that policy can have an impact on some of your other executive risk policies. So we all have professional liability or E&O, or from the medical field, we have malpractice, whatever you want to call it. But we have other, I call it the executive risk type of policies, where if we wind up in a lawsuit or we wind up in trouble, these policies in some fashion are going to have to come in and help pay fines or defend us. So a mistake in any one of these policies can also cause claims or impact on some of the other policies that we're paying for. So it's really important to have the right kind of posture in the middle of all this.
With that, why don't we have, if anyone has questions, and we'll have Mike be the handle the questions. If you have questions, just put them in the chat thing, and let's pass it over to Mike and see how we can just have an open discussion of what makes sense for everyone.
Hey guys, we're all friends here. So, if you have questions, feel free to unmute and ask away.
Hey, Mike, this is Fred Pond. I got a couple of questions.
You got it.
First one is, if I sit on a couple of boards of directors of companies, this makes me think I need maybe to ask more questions than I have in the past about what the company has been doing around some of these things. If I want to do that and get an opinion, is Rusty able to review something that's in place and give constructive feedback on, what that policy looks like, the position the company's currently in, ask questions about, why, what's in there, and are we in full understanding? Is that a service that's provided, and is it come with a fee or not?
So I'll be happy to review anything for you guys. And as long as you don't send me like 9 million things, as a courtesy to Matt and Barbara and Mike, I'm happy just to look at that for you. If you're their buddy, you're my buddy. And if I can just focus in, because you may realize this, you might be a genius and realize how brilliant of a question this is, but I'm going to tell you why that's such a brilliant question. In recent years, not from criminal, okay, when you talk about litigation, I'm not talking about being prosecuted for crimes. I'm talking about civil, tort damages and punitive and liability and those kinds of things. Cyber breaches are now piercing that corporate veil, and directors and officers and C-suite folks are being held personally liable under the clause of duty of care, of fiduciary care, for punitive damages and liability damages. And so that question is spot on. I spent 2 hours yesterday with the big medical center redoing their directors and officers policy, because they're realizing now, most DNOs have $1 million or $2 million, but what happens is the entity sucks up all that money first before the individuals can take advantage of any of that insurance money. So what we've started doing is we put in determined or defined limits. So let's say you have $2 million worth of coverage for directors and officers. The company can only take $1 million. And the other $1 million is left for the individuals who might need to be defended in court as well. So it's not just the amounts or what's covered, but how that money gets spent in the middle of those coverages that you need to have your broker look at. And honestly, I'm happy, and I'm kind of an easygoing guy. So if you send me something, I'm going to be totally honest. And if I see they have a great broker, great coverages, I'm not going to try to steal anyone's customer from anybody. I don't need that, right? I'll say, stay where you are. You're doing good. But if I have a holy shit moment, I'm going to tell you that as well and say they need to add this or they need to do this, or hey, have them find another guy, have them run screaming and yelling away from their guy, whatever. I'm easygoing, but I'm very direct. But I'd be happy to look at that for you. So Fred, the directors and officers, the errors and omissions, in the MSP world, we call it professional liability. In the medical world, they call it malpractice. In my professional services, we call it errors and omissions. So directors and officers, errors and omissions, and cyber liability. And then on the benefit side, there's a bunch of other ones, but we don't need to worry about those, are all that executive risk, a suite of executive risk policies that now in our litigious society, we really need to take a good look at. And Mike, you mentioned something at the beginning. I'm going to go ahead and address that now because it kind of goes along with this. Have an insurance broker, not an insurance agent. And insurance agents are not bad. They're ethical, they're honest. But if you have a strong commercial organization, a broker can better represent you. Brokers have multiple carriers. They have multiple lines of business they can write for you. They usually have more experience on the commercial side. When you have an agent, and when I say agent, I mean someone who's only State Farm or only Farmers or only Allstate. They can wear khakis, or you can be in good hands, or they can have an emu or an elephant, and there's nothing wrong with them. But their first obligation is to the carrier, not to the customer. When you have a broker that represents multiple lines, they're better able to make the customer their first priority instead of the carrier, because they can say to Chubb or Cincinnati or Travelers, screw you, I've got other carriers I can go to if you don't treat my customer right. So try to find a broker, not a captive agent. And again, I'm not slamming captive agents at all, but for the types of sophistication and the types of coverages you're going to wind up needing as you grow, some of the captive ones just don't have all the options available to you that would benefit you. So that's my comment about that.
Okay, very good information, Rusty. Thanks a lot. And clearly I've got things to think about and that stuff. One question that kind of is a follow-up to this is, with the shrinking margins and everything that's going on, is there a chance that insurance companies could be illiquid to deliver on their current commitments as these things continue to go up? Or is there some balance that says if you've got an agreement and it's for the next, year or 2 years, that it will get followed up and they can't, go illiquid on you?
Yeah, you're not gonna have a claim not paid because they don't have enough money. You might have a claim not paid because you didn't keep the promises you made or you didn't follow those conditions. But every one of these carriers, and no matter how big they are, they all have an insurance policy they buy from somebody above them to pay off if they run out of money. So it's like this incestuous circle of people buying insurance from each other. And I know I'm talking bad about the business that I'm in, but they all protect themselves with, some call it stop loss, some call it umbrella, they all have these other levels that they purchase. And then by sheer weight of the government, they're not going to be allowed to, they have other lines of businesses they write. And what's funny, I found this interesting. If you don't, I'm sorry, but I just think it's kind of cool. Most of the cyber liability policies that you buy from your captive type agents, like your State Farms and your one-offs, they're not really writing that insurance. They're buying it from Hartford Steam and Boiler. So 80% of the cyber liability policies out there are really Hartford policies with somebody else's name on them. So even right now, they're not the ones leveraging that policy for you anyway. They're going to companies better equipped to do it. So, when you get into the bigger ones like Cowbell and well, for the moment anyway, Beasley or Coalition, these cyber companies are still writing their own paper, but most of them are just farming it off to Hartford Steam and Boiler. So a lot of your Hartford customers may not even know it, So, but they're not going to run out of money.
Okay.
And that's why they're making these adjustments so that they don't.
Right.
And let me tell you, all those things they're making you do, honestly, if we can get over ourselves for a minute, we would probably all send flower baskets to the insurance carriers because they're forcing us to do what we probably should have been doing all along, keeping our data safe. And sometimes it's funny. We don't care what the government says. We don't care what vendors say. We might care a little bit more about vendors than the government, but somehow when it affects our ability to get insurance, all of a sudden we listen. And half of the stuff is probably stuff that your IT folks or MSP have been asking you to spend money on for 5 years anyway. That's usually what I find out. So.
Okay.
Yeah.
Thanks a lot. That's good to know that if you're in a policy, you carry it to the end and then you may change and do it there, but you don't have to try to rip and replace mid policy or anything because they will be there if you have the right T's and C's and if you know the risks.
Correct. Yeah, that can be some weight off your shoulders there. Yes, sir.
Last question I have has to do with this. Every year they ask, as you mentioned, they ask for more things about, are you doing this? Are you doing this? And are you doing this? Is there a standardized way that is going to come in this industry that they all will be doing the same thing and it will be a more standardized checklist and something that if you're using, say, like with one of my clients, KAMIND is the solution that we've implemented to monitor it, and that is a level set that says, okay, if we're doing that, it immediately equates to something that the insurance companies understand, without going through like a full CMC certification or, obviously most small companies aren't going to try to get a SOC 2 or some sort of a third party audit and pay for all that to do it. Is there an easier way, or do you see it evolving eventually, or is it just the wild, wild west?
No, I think there's going to be some of both, right? And part of my answer is speculation, and this part is speculation. I think what you're going to see over the next couple of years is, if at the very least you're adhering to the best practices of, say, the NIST framework, you're going to be fine with any insurance company. And you mentioned SOC 2. I think they're going to take that style of approach as far as verification, but even SOC 2 is not a set standard of best practices. SOC 2 is just you proving that you do what you say you're doing. And everyone who has their security process is doing it a little bit different, but they all can still get SOC 2 certified. SOC 2 is just the way you prove that you're doing what you say you're going to do. CIS and NIST, though, in my opinion, would make the insurance companies very happy. And the real win there is, honestly, at the very minimum, that's what we should be doing for best practices anyway. We should be choosing to govern ourselves. And see, this was the discussion I get into with clients is we keep feeling like we're forced into all these things. But if we were taking a proper look at the risk, the chances are we'd be governing ourselves probably more conservatively than what compliance is requiring anyway. But we just haven't taken a proper look at the risks that are out there. In fact, one of the last things Donald Trump signed before he left office was like a couple of weeks, like January 5th of 2020. He signed, some people call it a safe harbor bill, some call it a plausible defense. But if at the very minimum you can document that you've been following the best practices of NIST or a greater framework for 12 months, you get relief from tort and punitive liability in the event of a breach. So some, Ohio and a couple other states have already codified this. So as a business owner, I don't know why you wouldn't want to get that clock ticking anyway. And the beauty of following those best practices is there's not an insurance company in the world that's going to have a hard time with you. If you can show those best practices, show that you're training to those, improving on them, and can document that you're doing it. So if we were, the reason why the government and the insurance companies have to make these moves, honestly, I know you don't want to hear it, we're not governing ourselves properly. If we were, I mean, the reason we need policies and procedures is because we keep messing up. If we never messed up, we'd never need policies and procedures. So, you know, again, it's that human component. You got geniuses like Matt and Mike and Barbara building these sophisticated combination locks on our bank vault doors that nobody can get in. And then you have dumbasses like me who leave the bank and never shut the bank vault door. And so it's security and compliance. They got to build the door, and then the simpletons have to remember to shut the door when they leave the bank, or the security does no good. And then in case both of those fail, we have an insurance policy that will help us pay. And so you got to have all three things in there. So Fred, you know, that long answer is if you'll at least get your clients to practice the tenets of the NIST framework that apply to them, right? There's 110 controls with a myriad subcontrols. They may not all be applicable, but whatever ones are, if they will at least practice those best practices, they're not going to have a hard time with any insurance company. That's where I see it leveling out.
Okay. Yeah, thanks. One question. I mean, there's always pushback on investing in compliance and security by, you know, every CEO, every CFO. Oh, do we have to spend that kind of money? Those kind of things. So is there I mean, obviously, if you can't get insurance, you know, that's a big risk, but that balancing act of depending upon how far you go versus can you lower your premiums, is there, because every CFO always wants to put numbers on it. You know, if we spend this much on compliance and putting these steps in place, can we see an offset on something else? That's just the way hate to say it if there's CFOs on the call, but that's how they think.
And that's where it's kind of our job. So it would be easy for me to reply and say, well, the CFO doesn't know what he's talking about. But if I take the bad tone out of it, it's because they don't know what they're talking about because we haven't educated them. No, you're not going to spend $100,000 on cybersecurity and get your insurance for $100,000 cheaper. It's not going to offset because there still is some risk that you're transferring. But what you're not going to get, in fact, I had this conversation this morning with a customer. I said, hey, I know this seems like a high bill. I was kind of intervening between them and their MSP. And I said, they're a medical firm. I said, how many names are in your database? And she said, about 250,000 names. I said, all right, so let's just pretend you got a breach and there were no fines, there were no penalties, there were no lawsuits. All you had to do is pay the notification costs, which on the low end is $150 per name. How much would that be? And she got her calculator out and she goes, well, that's $37 million. I said, so how much cyber insurance do you have? She said, $500,000. I said, do you think 36.5 would be a bankrupting event? Yes, I do. You know, so the return on the investment is they're more secure. I mean, they can complain all they want about the premium prices, the price to be secure. In fact, I read an article, somebody can help me out. I know his last name is Morgan. I can't remember his first name, but in 2015, he said this. He was the president and CEO of Bank of America. And he said this, if we're going to be brutally honest as C-suite level people, we have to understand that the only department we have that has the potential to be an unlimited budget is IT and cybersecurity. Because if we get hacked, if we get a breach, there's no amount of money we won't spend to bring ourselves back. And so kind of go back to that slide is is it really too disruptive or too expensive? How expensive is it to be shut down for 9 months? How expensive is it to go out of business? How expensive is it to not be able to get insurance? And that's where it's kind of our job as experts in our field to not just be guys who go and sell software or tools or insurance policies. We have to bring solutions and education to our clients. It's not the CFO's job to know. It's not his job to know or her job to know that whatever they spend in cyber compliance is going to be offset by the cost of premiums. It's not their job to know that. And if they knew that, they wouldn't need us. So it's our job to go teach them that, but help them see that real value, because they're right to push back. That CFO is going to push back on spending any dime. It's their job. Just like the insurance companies look for a way to not pay claims, a CFO looks for a way to not spend money. And you can't fault them for that. That's their job.
Yeah, to add one point that you mentioned earlier, like when the KAMIND Guard, as we do the DoD subscriptions and we also do the commercial, so we apply the CMCL1, which is in this framework, across all the clients. So even on the commercial side, we have the policy, the processes in place where we actually collect the object evidence, the proof and everything else, so that if a claim comes through, you have documented evidence that you're basically aligned with it. And if you get to a point that you're into a battle between the insurance company and the client, now you can bring in an independent third-party auditor that's basically through the government, which is different than a SOC auditor, which is, in this case, they're come under the DOJ stuff, DOD and the Department of Justice, and they can audit and say, yes, you're assessed, and this is where you are. So you have a third-party audit that has to stand behind it. That's why we went the approach we did for applying the security controls for NIST. So they're the CMC level controls. So they're standard across the board and they're measurable and it tracks what's in the market.
And you're right, documentation will save the day. If you don't document it, it didn't happen. Whether you're talking to an insurance adjuster, a government official, or a SOC auditor, if it's not proven, it didn't happen. And so you got to make sure that whatever system or processes you're using, that includes proper documentation. That we will saves our rear ends in the end of this.
Okay, thanks very much. I've probably taken up too much time as just one person, so I'll shut up now and listen.
No, we love your questions, Fred. Thank you very much. Anybody else have any questions? Please feel free to unmute and ask away. So while you're thinking about your question, I would like to say that please use me as a conduit to get to Rusty. I dropped my email in the chat there. And what we need from you is your policy or your contract and your questionnaire or the application you used to get that policy or contract. Those are the basic pieces we need to review to tell you, where you're at. And we've done several reviews with Rusty at this point, and nobody is really coming back, as a dumpster fire or in bad shape. Most people are actually in pretty good shape. And like Rusty said, he's really honest. He'll tell you where you lie, and if need be, Rusty can provide quotes to better your situation for sometimes less money as well.
I have a quick question for Rusty. This is more about the applications that people submit for cyber insurance. Why is that so important, and why is that becoming like the key cornerstone of everything that's put together?
That's a good question, and now it makes me feel dumb for not addressing it. So I'm really happy that you brought it up because it's an important issue. So let's forget about cyber liability for a minute. Let's talk like my homeowner's insurance. Everybody has that. If I'm filling out this application, the insurance carrier is trying to figure out how much to charge me to allow me to transfer my risk to them. So they're going to ask me questions like this. Do you have a fire hydrant within 1,000 feet of your house? Do you have a security system in your house? Those kinds of questions. So when I bought the house I'm in now, I'm with Central Insurance for my home, and I said, hey, I don't have a security system, but within 30 days, I will have one. So they rated my premium based on that promise that I made that I'd have a security system. Now I went ahead and put it in. But let's say I never did it and I get a home intrusion and the adjuster, he's looking at my application and he says, I don't see your security system. Well, I never got around to it. Well, your claim is denied, because when we fill out that application now, anything that we say we do or are going to do has now become a warranty or a promise that we're going to do something. That's a little bit different. You know, they'll ask some general questions. Hey, how old do you think the roof is on the house? Well, you don't know, right? Hey, it's 5 years old. If it finds out it's 7 years old, no harm, no foul. But if you're saying you're going to do certain things, so back to the cyber world, right? Do you have multi-factor authentication? Yes. Well, you better have it and you better enforce it. So there's a medical firm in Virginia, thankfully, thank God, not my client. They answered on their application, yes, we have multi-factor authentication. And they did. They paid for it through their MSP. They had their MSP installed everywhere. But there were 2 doctors in this group that thought they were too important to be troubled to hit one more button for MFA, and they refused to use it. So they didn't enforce it for these 2 doctors. So one of the doctors was the cause of a breach, lost them $1.96 million. And guess who didn't get their money? The doctor's office. Because travelers came back and said, you said on the application that you had an enforced MFA and you don't. We're not paying. So that application, like we talked about before, becomes part of those conditions or those promises that you've made, those commitments that you've made, that you're going to behave a certain way on behalf of the carrier to reduce their chances that they're going to have to pay a claim, and that you're going to get a breach. So all those questions that you ask, and Matt, you know, the reason why those questions keep getting more and more abundant is because they keep on finding more stupid stuff that we as human beings keep doing or keep refusing to do. So they're going to make it mandatory if we want to get, you know, and I don't feel the frustration of the MSPs, but I kind of see it third hand. I can't tell you how many times I'm sitting with a client and I'll come in and say, from an insurance basis, hey, you might want to put this in place. And the C-suite guy goes, oh yeah, we can do that. And I see their internal IT, their MSP looking like, I have been begging you for 5 years to do this. And some simpleton from an insurance company comes in and asks you, and now you're willing to do it. You know, it's like, I could just see like, no, why won't you listen to me to begin with? That's why those are important related to the policies, Matt.
Yeah. Well, I mean, that's good because, you know, when we ask clients that put on our security program, for instance, we ask for a copy of their insurance application. And then what we go through and we go look at it and we deploy against like CMC L1 for our guard security. And then we extend that with all the other additional questions that we need to watch out for. So we collect the object evidence and we basically have this collection of, you know, of the different types of requirements that the insurance companies have to make sure that if there is a breach, it's actually covered. And we have the documents to show that the process in place. And it's not something that it changes all the time. Every time we get a new application, there's always something on it, and we have to go tweak the security policies and we push them out to clients. But that's just the nature of the beast, and those are the things you have to be aware of. Like you said, we're stewards, and we got to make sure we do the right things for our clients.
Yeah, and I don't know what businesses everybody in this call is in, but if you're in any kind of financial banks or even car dealerships or schools who deal with financial information, thankfully, it just got extended for 6 more months, but this new FTC regulation is coming down on anybody who can be considered financial. There's another myriad of regulations you're going to have to start looking through. Thankfully, if you follow NIST, you're pretty much good with it. But it's just another bevy of, I call it the alphabet soup of government agencies, right? It's FTC, ABC, XYZ, whatever they are, coming down and saying, you gotta start paying attention to this. And again, if you'll notice the best practices and the behaviors outside that security stack, and I think that Matt, you can probably speak to this better than me. Last thing I read a few weeks ago, it takes an MSP an average of 87 different tools to have the proper security stack for a customer that wants to be robust. Well, you can't get that for $1 a month. It's just It doesn't happen, but it's becoming more and more necessary to thwart. It's just that layered approach to keeping the bad guys off of our back.
Yeah, and it's also really interesting too, because when you start talking about layered approach on security stacks and everything else, you have to really now investigate the security vendors you're using, like we do a lot with Microsoft. People don't like this portion of the Microsoft DLP process, but they rip it out and then put a third party, but in the process, they break all the other layers that are dependent on it. So they actually are more in worst case than they are if they just left it in place and then go look for what they need. And then we take the approach and what do we add to it to increase coverage, not trying to break what's existing there because it just drives up cost. So it's just, and then the other aspect, everything has to be verifiable and everything has to be proved that you're doing what you're doing. And that's kind of the biggest change. And people have to understand that's the way the market's changing and the environment's changing.
Yeah, early this morning, I got a call from a medical vendor who they had a person for their own personal uses logged onto the system and looked up some patient information that had nothing to do with her, but she was just being nosy because she knew the person. And thankfully they had the right kind of security in place, the right kind of audit logs. They caught it right away. It was so sophisticated. They knew there's no reason why this person should be looking up this person. So I went over early this morning at 7:30 and fired somebody for them. But thankfully they had the tools in place to catch that right away. And no, otherwise this woman could have been blabbing all over town about this other person's business. And so it's important. And now here's what's really great is they have digital documentation that literally, I just did HIPAA training for them 3 weeks ago, and this woman attended. So it's not like she can even say she wasn't told. The documentation is going to do more to save their butts than the fact that they caught her doing it, because they can say, here's the audit logs that the MSP produced. Here's the digital documentation that she attended training. It's the documentation that's going to allow them to move her out of there and probably prosecute her. So it's important. It's that three-legged stool, right? Security, compliance, and insurance that we have to have in place. That was actually kind of fun. I haven't fired somebody in a long time, so kind of good.
All right, guys, we have like 7 minutes left. Who else has a question they'd like to ask? Please feel free to do so. Just unmute yourself, ask away. I thought I heard a noise, but it went away. Anybody else? Come on. This is your time to get your questions answered by an expert. The sound of silence. All right, well, if you guys think of anything after the fact, you can email it to myself. I'll forward it to Rusty, get your question answered and back to you. And again, if you'd like to have your current policies reviewed, just use me as a conduit, mclass@kamind.com. I'll work with Rusty. We track these things. That's why I need to be kind of in the middle of it. We use a spreadsheet and track things. And then we'll get you answers back. And a lot of times what we do is we set up a meeting to discuss what we found and make some recommendations, things of that nature. Anything to add to that, Rusty?
Yeah, you can just relax. I won't try to get your insurance business. I'm not one of those kind of insurance guys. In fact, a couple of weeks ago, a guy was asking me to take his insurance. And I said, well, what's your relationship like with your current broker? And he goes, well, we do own a plane together. And I said, I do not want your business. I'm like, that next flight is going to be so awkward. Please, I'll just look at it, but I don't want your business. So I'm pretty easygoing. I won't try to reach out from Virginia to West Coast and steal you. All
right, guys, last chance to ask a question. Anybody have one for us to close this out? All right, all quiet. Well, anyways, we really appreciate you guys jumping on the webinar with us today. And we thank you for your time, and we very much look forward to seeing you on our next KAMIND webinar series. And after the first of the year, we'll have a whole new calendar to share out with you. In the meantime, keep checking your email for invites. And like I say, if you think of anything after the fact, just email us and we'll respond to you right away. Otherwise, appreciate your time and have a great day. Thank you very much.
Thank you, everybody.
Thanks, everyone. Thanks for attending, and pleasure to work with all of you.